So we absolutely have to go ahead and touch on Tesla stock because we actually have a few positives coming up in the near future, but we currently have a lot of negatives taking place right now that really don't bode well for Tesla stock. And I wanted to just quickly provide an update. Now, a few weeks ago, I was mentioning how the fundamentals for Tesla were looking pretty weak and how Tesla stock was likely to have a big drop due to the weak delivery numbers that we were likely to get. And in fact, we ended up having those weak delivery numbers that I predicted. Fundamentally, Tesla wasn't looking good. However, right after we saw the drop because of the weak delivery numbers, we ended up seeing this huge bounce take place. And that's when I started getting bombarded with emails and people saying, Justin, look, the fundamentals for Tesla don't matter. Tesla stock's going to continue rising up. And I want to just quickly point out to something that we ended up seeing from this bounce, and that's the fact that this could very well be what's called, from a technical term, a dead cat bounce. Now, let me just quickly say on the record that I'm not a big fan of that term or that terminology. It's a bit cruel, especially, since I have two cats myself. But just to kind of give you a visual perspective, a dead cat bounce is when you have something drop so hard that we just end up getting this bounce and continue falling down even further. Now, the term kind of originates from the idea that if you were to have a dead cat and you were to just throw it to the floor as hard as you can, it would still bounce even with its lifeless body. Again, not a big fan of that term, but that's kind of what we're seeing here. Now, it's too early to tell because we are kind of consolidating. We're not seeing much activity take place, but we did fall off from that initial bounce. And I want to go ahead and talk about what are the positives going forward, but also some of the negatives. Right now, in my recent video yesterday, I mentioned how hedge funds currently have short positions that we haven't seen, right? They're increasing their short positions, and we haven't seen this since February of 2021. And remember, 2022 was a bearish year, so it could have been that hedge funds were just preparing, right? Just kind of, they're a little too early back in February 2021, but we're seeing a lot of bearish activity, short positioning from hedge funds, and that could be an interesting indicator, right? The big boys, the big suits, are starting to short the market. Now, interestingly, today we did get an economic report. We got the U.S. employment report, and what we ended up seeing was that we thought that the job numbers were going to be at 155,000. They actually came at 256,000, so a huge jump. And so that's good news, right? Because more people are actually having jobs. Unemployment is not going to go ahead and decrease. And that's good, right? Because I often say that jobs are the bloodline of the economy. However, I want to go ahead and point out to something that some of the economists from Wells Fargo mentioned. And, you could go ahead and pause the video and read all this. But what they mentioned here is that due to pretty much this solid job report that we ended up getting, paired with the fact that unemployment has been relatively flat, this will likely push central banks, so the Federal Reserve, to be patient with future rate cuts. And the market does not like that. That's a big no-no, right? Because, of course, we want, the federal funds rate. We want the Fed to continue easing monetary policy because it makes it much easier for businesses to borrow money and then expand and grow. But with the idea that, okay, jobs look like they're actually okay, and that may actually spike inflation in the future, well, now there's a fear that the Fed may end up having to be patient with their rate cuts. And one of the things I shared within the Push and Profit private group earlier today is that a lot of financial institutions made updates on their prediction for what the Federal Reserve is going to do. For example, Goldman Sachs now expects 2 rate cuts this year in June and December instead of 3. So they cut out what was in March. Then you have JP Morgan, who also removed March and June and September. And then you have the bearish of them all. Bank of America said the cutting cycle is at an end, and the extended hold is most likely, and the next move is likely to be up and down, meaning that the Fed is likely to go ahead and hike rates rather than cut rates. And so the market doesn't like that, right? That's a big no-no, and that's probably why when we take a look at the S&P 500, we actually broke below a critical area of support. Granted, we are at this area over here, so hopefully we hold up. We actually did drop and then we close, right? That's just the anatomy of a candle. I like also just kind of switching to a line chart because you could see things a bit clearer. That's why Charles Dow, the founder of technical analysis, like using line charts. They show the closing price. But essentially, we broke down a major area that was a support from this range. And so now there's a lot of speculation on what's likely to take place going forward. Now, quick plug, if you are interested in joining the Push and Profit private group so you get my updates, I do my daily briefings, make sure to check out the link in the description below. I'll also put it in the comment section down below because I have a massive coupon where you could just join for $6 for the month. That's equivalent to just 20 cents per day. So definitely check that out. But we're seeing, the market push down. We're looking at market breadth when we look at RSP, which is the S&P 500 equally weighted. Market breadth is not looking good over here, right? That's also another concern. But a major concern that I've been sharing with the Push and Profit private group that applies towards a vast majority of the companies in the S&P 500, including Tesla, right, is looking at the Dixie, the dollar, the greenback. The United States dollar index just hit another all-time high. And I've been kind of explaining this for those within the Push and Profit private group and also in these public videos because I know when you kind of delve into kind of how the macroeconomic environment works, it kind of gets a bit confusing. But to make things very simple, a strong dollar is bad for US stocks simply because it makes US products more expensive overseas and it reduces the value of foreign earnings, right? And so that leads to lower revenues, profits, and stock prices for a lot of the multinational companies. Think about, like the tech giants. They get a lot of revenue overseas, and that also includes Tesla, right? They sell their cars in different parts of the world, Europe, China, etc., right? And so why is the dollar, rising up so heavily, right? So one of the things that is causing the dollar to rise up, and this is where we kind of have to move into tariff talk, the talks of tariffs, because when the U.S. imposes tariffs on foreign goods, it makes imports more expensive. And so the United States, we start seeing buyers of fewer goods from other countries, right? Because tariffs are increased. And so with fewer dollars leaving the country, the dollar supply tightens, causing the dollar to appreciate, right? And I know it gets confusing because when we talk about the dollar going up from a consumer standpoint, I always say, well, it's good if you're going to travel overseas. You want the dollar to go up and go to, Japan or, travel around the world. So that's great from a consumer standpoint. But when we're looking at the stock market, right, you look at companies like Tesla, you have to understand that these are underlying businesses. I know if you're someone who's trading, swing trading, whatever, we just look at these tickers and we just think, oh, it goes up and down. But there's fundamental businesses that are attached to these ticker symbols, right? TSLA. And so one of the things we have to understand is that with a strong dollar, that hurts companies that are overseas because foreign demand for U.S. goods drop because there's more. They're now more expensive in lower currencies, and then foreign earnings translate to fewer dollars, even if the U.S. Companies maintains its sales volumes overseas, because the revenue it earns in foreign currencies will translate to fewer US dollars when the company reports earnings, right? And so hopefully I didn't lose anyone here, but if Tesla still maintains the same selling in Europe and the same selling in China and any other part of the world, but the dollar is higher, well, guess what? When they convert their earnings from those foreign currencies to US dollars, well, it's actually less. And so that's not good for the earnings, right? Because of course, when we talk about companies, you want to look at the fundamentals, and eventually we always retrace to the fundamentals. And now it's too early to say if we end up falling down. If we do, we'll go ahead and touch on what's the next area to really watch out for. But at the beginning of this video, I also mentioned there's some positives, right? So one of the positives that we have is that in just 10 days from the recording of this video, we have Donald Trump, or President-elect Donald Trump, stepping into office. And we know that last time we saw kind of the results for the election that was very positive for Tesla, right? We may see that resurgence of positivity enter into Tesla again with the idea of regulations actually taking place, or deregulation taking place, which could benefit Tesla, because we saw Tesla bounce up with just a thought of deregulation taking place, but we could also see a resurgence of Tesla stock rising up again if we actually see the deregulation actually kind of enabled, right, and actually put into place. Because these are just rumors. Well, once Trump is in office, that may actually come to live action, and deregulation would actually benefit Tesla. So something we'll watch out for. Now, in the event that we do see Tesla stock falling down, because still the fundamental macro outlook is not looking that great, the area that we're obviously going to be looking for is going to be this area right around here, $349. Now, when we're talking about the area that we're looking for, that doesn't mean, hey, this is where I'm buying at. And by the way, this is not a buy or sell recommendation. Only trade whatever you see value in. I could be completely wrong, right? But just wanted to share that. Now, when I say an area that I'm watching, it doesn't mean that I'm going to buy in that area. It just means that, well, now this is the next area to test whether we break down even further below or we actually bounce up. Also, one way that I like looking at that, I like adding the volume profile, which is volume relative to price, and that's different from your traditional volume relative to time. If we continue falling down, we have this volume pocket, which means that if there's selling pressure, it could really be kind of amplified as it goes down and pushes the order books down, since there's less exchanging between buyers and sellers. You have more sellers take place, boom. Then we enter this is this area where there's a lot more volume relative to price. And that's why I like looking at the volume profile. Kind of makes it very easy to identify where there's areas of consolidation, because there's a lot of exchanging between the buyers and sellers. And so that makes it very easy to kind of find the levels where things can move quickly up or down. Because when there's volumes or these volume pockets, if there's buying pressure, it easily pushes it up. If there's selling pressure, it could easily push things down, right? And that's just the best way to explain it. Little volume relative to price, there's not exchanging, and so whoever's in control is going to move the books up or down. That's going to push the stock price up or down very quickly. And that's why you see in those pockets, Tesla have massive moves, and we're right close to an area where we may end up seeing another massive move. So we have to see, do the buyers step in, or do we end up getting close to this area right around over here? So just wanted to provide a quick friendly reminder, a friendly update for Tesla. The friendly reminder is actually to hit the like button, subscribe to the channel if you have not done so already. And if you're interested in any future content, make sure to check out this video right over here. And I'll see you guys on that next video. Take care, guys.